Good afternoon, everybody, and welcome to Afternoon Market Action. My name is Glenn.
My name is Patrick.
And we're glad to be here. I am back off of vacation, and I want to say, Patrick, first off, thank you for filling in for me for both last Thursday, and the Monday afterwards. I appreciate that. I think you did a great job, so I appreciate it. I know it made a busy week for you.
It was fun, though.
I appreciate it.
Good showing, so.
There you go. VV Nation came out to support you. That's always a good thing. Before we get started, just want to put our thoughts and prayers out to all those people in the Florida area. Kirby, are you on? I know Kirby is right in the midst of all that's going on in the Tampa area right now. So for all of you who are out there, if you are in the Tampa area, hopefully you guys are being as safe as you can, batten down the hatches, folks. This doesn't look like it's going to be a little piddly something. So our prayers go out to all of you who are in that area or being affected. So real quick, the alert today said what the market's move means for you guys. So let's go see what's going on in the market. The markets are just going down, trying to rebound, but going down. We're going to keep our eyes on what's going on in the market today. We've got some stories behind what the markets move are doing as well. So, before we go jumping on board, how many of you are excited for the upcoming masterclass? Type a 1 in the room if you are already signed up for the masterclass. Type a 1 in the room if you are signed up for the masterclass. Let's get this started. Patrick, stop. Gosh, because I'm going to shut you down. The masterclass, Joey put that, there it is. The masterclass is our next big event. It's going to be taking place this Friday. If you're not signed up for like Zen Master Me, hey, go to www.vectorvest.com/masterclass. Folks, it is free. It is absolutely free. We've got a full day of presentations to help take your investing up to the next level. So if you can't watch it live, it'll be up on YouTube over the weekend. You have an opportunity to go back. It is free. It is absolutely free. And you know something? It could be a game changer for you. It actually really could be a game changer. As you can see, breakthrough techniques that give ordinary investors a massive edge over Wall Street. We're going to show you how our system has outperformed the S&P 500 by 10 times over the last 22 years. I will be giving a presentation. Here's all the people, Here's our agenda. And folks, we invite you, please, please, please come on out. It is free. www.vectorvest.com/master class. All right. You know what I want to do first, Patrick? Before we get into the news, let's talk about what's going on in the market. All right. How about that? We'll pull up a market timing graph. So we're going to do that live right now. That's intraday what's going on. Let's take off these indicators. This is what the market looks like. And Patrick did the live trading in the Jockey Club this morning. Patrick, you want to tell them what happened this morning?
I didn't do it this morning.
Oh, it was yesterday?
Yeah,
Hi,
I
Kathy.
did yesterday.
Oh, you did yesterday. What happened yesterday?
Markets were looking good, looking positive. So we took a trade in ATXI, I think it was, or AXTI. Made 37% in about 17 minutes. Two halts during that 17 minutes.
All right, so Patrick's got the hot hand in our Jockey Club. He had a trade, guess it was a week ago, where the stock went up over 100%. We captured 75% of it.
Yeah, so far between those two trades, we're up over 100% on those positions. So
awesome. And that's a live trading class called the Jockey Club. So we look at what's going on today. We gapped up this morning and just been running up all throughout the day. What does that mean for you? Well, if you're more of an aggressive trader, today's a good day to buy long. But as soon as I put this onto a 3-month graph, that's what we see. Now, A lot of people will be asking, with the markets at the levels of the MTI at 0.41, the buy to sell ratio at 0.06. Patrick, what is your opinion? Is this the blast off day?
I mean, well, everything's being driven. Well, let's start off this way. Everybody, when the market's been going down the last week or the last few weeks, everybody's been saying no catalyst in sight to see a potential reversal in the market. With the UK pretty much falling as hard as it has, they've quit their quantitative tightening, quote unquote quantitative tightening, as best as they could. Turning back on, the money printer is going to be doing quantitative easing, where they're buying the bonds to try to help their bond markets out a little bit from collapsing overnight. So that could be a major catalyst, because Bank of England may be the first, but we could probably see the same sort of effect happen all across the globe. It's almost like an addict, saying, all right, I'm quitting, I'm cold turkeying. They've gone a few weeks, and then all of a sudden, all right, well, maybe one more time and I'll be good and I won't do it again. And that's what they're doing. One more time. We can't go out or go without QE. So I don't know. I think it just delays the inevitable of it. So gonna be interesting to see where we go from here.
All right. Roger, Patrick's going to talk a little bit about this. Must be a heavy gravity day. Apple is falling. Patrick is going to talk a little bit more. That's one of his stories that he's going to have up today. My take on what's going on today is we don't know if this is a blast off day until we have a little bit of confirmation tomorrow. But our indicators, let's go back to yesterday. Our indicators were definitely at the levels of the market being oversold, looking for a bottom. Let's put this on a 6-month graph. Let's put it on a 1-year graph. Let's put it on a 5-year graph. We're at a level, let's take that off. We're at a level where the market was looking for a floor of about 51.66. And boom, we fell through that. And now we're trying to do a little bit of a rebound today. Let's go see. For those people who don't think you can time the market, I am letting you know by way of our indicators, the market is definitely looking for a bottom. But I'm with Patrick in that, what is the catalyst to actually push us higher? And could it be the Bank of England being one of the first banks that are starting to feel that the recession is there, but now with the tightening like we're doing, is it too tight? The Fed is not that far from its recommended rate, right, Patrick?
They still got a 75 and a 50 basis point move to go by the end of the year to get to their target.
Okay. So we'll see
another
what
big
happens.
one, and then maybe a not as big of one.
And then, in my mind, I think they should stop before they start QEing. Till they, instead of quantitative easing, let it settle before they do anything else. Catalyst is the referendum in Ukraine.
If anything, Sonny, that's going to drive the markets down, Sonny.
I agree with that. I think that it would push it. Well, unless, now there's another side of that. Unless they foresee that Ukraine is making some headwinds against Russia, that could push the market higher. Could.
I think short term, yeah, I agree with you. We definitely are oversold. We could see a temporary bounce. Great for aggressive investors, but for longer term investors, you're still sitting on the sidelines right now.
Yeah, you let the market come to you if you're a little bit more conservative. But a good update today for those of you who are playing stocks long. You should see that happening in your portfolios. I'm still holding a couple of contra ETFs. I just want to see if we get more confirmation going into tomorrow. All petroleum stockholders, time entry drawdown has much bigger than expected. So you know what I'm thinking about in regards to oil, what's happening right now in Tampa. I also saw that we're doing something, and I didn't get the full story, but we're cutting back on production because whatever production we're going to get, we want to put it back into the reserves. We got a hurricane. This ain't going to be the first and last hurricane that happens that's going to affect oil. I'm still holding my WTI. We'll see what happens. I did get out of Boyle, though. I took a big hit on Boyle. I got out of Boyle.
Who would think that dumping reserves right before hurricane season was a bad idea? Not
Yeah,
me.
who would have thunk that? Yeah, who would have thunk that? But I still think that that's going to be a good move for oil. I still been long-term positive on oil or bullish on oil. It's just been a tough play with oil just falling. What is it? It's below $80 a gallon, a barrel.
Well, we talked about it on Monday. I know you're traveling, but we, talked about how, or somebody was asking about oil, and oil is a hard trade right now because everybody's so hyper focused on a recession. That's being the main driver driving oil prices down. But, at any moment, so, if you take the bearish stance, you're going with the recession. All right, you're making money for right now. But at any moment, you could wake up the next day and find oil at $200-300 a barrel because, Putin drops a bomb on Ukraine.
Damn! They ain't gonna do that. I don't think they're gonna do that. I'm just saying, there's with all that's going on with Russia and Ukraine, there's that unknown factor that could literally happen overnight, and you wake up and oil's completely reversed and it's collapsed your position. So I don't know. I think it's too much risk in either direction to really take a trade in oil right now. Yeah, you know me, I'm holding it. I'm holding it. I just think long term it's a good play. I'm taking some hit in it. I took a big hit in Boyle though. Took a big hit till I said that was enough. Enough was enough. I felt like Popeye. That's all I can stand. I can't stand no more, and I got out of Boyle. So I don't think it can't or won't happen. I hear you, 427 trading. All right. So that's what's going on intraday. This is what's going on end of day. Could this be the blast off day? It is a big up candle today. Those people, as Patrick and I both said, that are more aggressive, today is a good day. Let's just go see if we get followed through the next day. I've got the Jockey Club for the next 2 days, 1 day, because I'm going to be at the master class on Friday. So I've got Jockey Club tomorrow. We'll see what happens. What's your perspective about XBH? So we're going to talk a little bit, not about that stock, but we are going to talk a little bit about what's going on in that market. Remember, we put up a link for you guys on our community channel for you guys to chime in about what stocks you want us to look at. We've got 10 of your stocks that we're going to look at today. Really, Tyree? Uncle Glenny? Uncle Glenny, you might as well join me a roll with. I'm not in lithium. I'm still in uranium. I'm not in lithium, but I still am in uranium. He just called me Uncle Glenny. Where did that start? Where did the Glenny thing start from?
I don't know. I kind of like it though. I think we're gonna stick with that.
Somebody called me Glenny. All right. So, are you still long on oil, Michael? Yes, I'm still holding a position on WTI. I am still holding a position on WTI. So. We'll see what goes on with that. All right. So that's what's going on in the market. Again, if you're more aggressive, you're probably taking advantage of today. If you're a little bit more conservative, Patrick brought up a good point long term. Let's just wait. Let the market come to us because this could be a head bounce. This could be a head bounce. This could be a head fake. And it could be a bounce. We'll see. All right. We'll definitely see. Let's get into some of the stories that we got going on. Patrick's got some stories. I got some stories. There's stories everywhere. All right. Overall, let's just take a look at what's going on in the, from the big noise or the big news. Atlanta Fed President Bostic expects job losses, but says there's a really good chance to get to 2% inflation without killing the economy. Hold on. Let me put this on. I put the crickets on there, Patrick, just so that you know. I don't see that. I don't see us getting to where we at. We're still at 8%, 8 point something. How do we get to 2% without killing the economy? All right. Does anybody believe this story? Type a 1 if you believe this story. Type a 2 if you don't believe this story.
I mean, I think a lot of it, he said all these comments over the weekend. So I think a lot of it comes from him trying to reduce some fear in investors, to try to help settle some of that fear. But yeah,
there's a difference between trying to settle fears and being outright silly.
Well, yeah, even a 0.01% chance is still a chance, right?
Yeah. So in our conference, we saw the movie, a clip from the movie with Jim Carrey, when he was talking to the woman, he was like, what kind of a chance do I have? Is it a slim chance, a big chance? Like 1 in 100? She says, no, like 1 in a million. And he turns around and goes, woo, at least I still have a chance. I don't know what movie that was, but, so maybe it's from that perspective. I don't think there's any way to get to 2% inflation without killing the economy. Because as you continue to raise the interest rates, all of the other negative effects that affect the market are still going to be there. They're not going to dwindle just because you think that it's okay. Was it dumb? Was that Dumber and Dumber? Dumb and Dumber.
So
Thank you, John.
Saying there's a chance.
So you say there's a chance. It was Dumb and Dumber. All right. So this is just an interesting story, but this is what's out there. All right. So I just want us as investors to see what's out there and make our own educated decisions as investors, observations as investors about what's real and what's not real. What's real and what's not real. A question came up and said, would you mind, is it okay if you invite people to the masterclass? Absolutely. If you want to bring people to the masterclass, you can give them the link. They can join as well. They can join. All right. So Glenn, Cheryl, and Max said to tell you that she tried sugar-free bacon. It was good. Who's going to eat sugar-free bacon? Good. Googly muggly. I'm not... Hey, we have to do this. Yeah,
I almost tagged you in a video I saw on Facebook the other day. It was baby back ribs wrapped in bacon.
Yeah, that's what I'm talking about.
Oh, man, they look good.
That's what I'm talking about. All right. Let's get to a Patrick story. Grotesquely overpriced, and I know why he put this in there. He's making a point. And talk about the story, Patrick. Go ahead.
All right. So, the 30% cut that Apple takes for any in-app transactions is pretty common. Same with Google Play, all of that. Now, where it draws a line, though, is what people are saying is these NFT trading platforms are now also going to be getting a 30% cut from their NFT transactions. It's one thing to take a transaction from selling in-game items and that sort of thing, but NFTs that are supposed to be off that, out of the control of a big corporation like that, they shouldn't have the ability to trade or take a 30% cut on NFT sales, because they're like going to Amazon, and because you bought something off of Amazon, with your iPhone, Apple shouldn't get a 30% cut of that. This is the same kind of situation. If companies are making like mobile games, for example, or making loot boxes and in-game currencies, and they're selling that through their app, I get that. That's one thing. But when you're trying to say now NFT sales are the same thing as an in-game or an in-app purchase, like a game, it really draws a line of how far does Apple's reach go. I think we've talked about it before, the lawsuit with Epic Games, I believe it is, and their Fortnite event that they had, that Apple just took their game off of their app. It's so we're finally starting to see people coming together and starting to finally question the 30% cut that Apple takes. Because that, especially when the average cost or commission rate is 2.5%, taking a 30% commission is pretty, as the article stated, grotesque compared to what the industry standard is. So this is just another case that people are starting to question. Why do they have to? Is it legal, and why do they have to pay Apple 30% commission just for, something being sold on a marketplace that has nothing to do with Apple, just because you're using the Apple phone? It comes in abusive but consistent. As we all know, Apple's been doing this for a while, the 30% commission for a while, but times are changing. It's time to start questioning, does 30% really make sense? And if it doesn't, how do we sidestep Apple to cut them out of that 30%? Because that, really gets into the developers and, the creators cut from what they're taking off of some of these sales. So yeah, we'll see. It'll be interesting. As it says though, the NFT marketplace standard commissions are around 2.5%. So 30% basically outpricing itself from the markets. So yeah,
I'm wondering if. Go ahead. No, go ahead.
It's going to be interesting to see, especially once the Epic Games trial finally comes to an end, how that gets resolved. But also, there's a lot of games that want to come to mobile. Mobile is by far the biggest area for gaming right now. And there's a lot of blockchain games, NFT games that are coming out, and that could greatly impact those and basically kill them before they even get to the market. So you're really hindering a lot of growth by jacking up by considering an NFT purchase through somebody's app, a app tax or whatever they want to call it, just because they're using an iPhone.
It's interesting because you ask any other person, the whole Droid space is much bigger than the Apple space, right? Would you say yes or no?
No, they're about 50-50.
I don't think so. I think that there's more. I think that there's more Droid phones out there than it is Apple phones, because Apple is still a niche market.
But actually, Android just surpassed Apple not too long ago, within the last year or two. So they're not that drastic. They're at most maybe 55, 45, but they're not more than 60-40 though.
But people are willing to put their stuff on the Apple market, Apple store, because it's going to get bought. And
because Apple users tend to pay more, or willing to pay, where Android users don't tend to pay.
Right. So I think that it's going to bring up a story. I think it's going to bring up a situation. But I'm wondering if Apple is big enough to overcome this situation, and people are just going to either accept it, whether they like it or not, or will they be? The question is, will they be able to push Apple to take that 30% commission off the table? That's the big question. And
I mean, I've already seen a lot of the feedback from when I found this article. A lot of iPhone users already talking about, well, if that's going to be the case, maybe they'll actually consider for the first time ever switching to Android. So,
and that's going to be interesting.
Yeah.
Right. That is going to be interesting. Apple's can strong arm people because they are Apple, but will it work in this case? It's going to be interesting to see.
Yeah, right. It's different. An in-app purchase is different than using an app to make a transaction. So
I got you.
It's going to be interesting to see how this plays out, though.
I got you. Elmer, I'm going to be taking a look at Amazon today. I wanted to keep Ron's statement up here. Just like inflation was transitory a few months ago, right? The Fed just putting themselves in a situation where they keep opening their mouth and they insert foot, and we'll see what happens.
It's not a foot.
I'm not going there. All right, next story. You wanted to know about Amazon. I got a story. We're delighted Amazon's second Prime Day promises to boost sales ahead of the holidays. Amazon's got their hands in a lot of stuff. Amazon, for the most part, is the delivery. I keep them in business. My wife definitely keeps them in business. Good thing we had somebody come by the house while we were gone, because we came back and it was like Christmas, because all those boxes were in the house because, we weren't there. But Prime Day, how many of you look forward to Prime Day to take advantage of stuff? Type of 1 in the room. If you don't give a flying flip about Prime Day, type of 2 in the room. But how many of you specifically look at Prime Day as an opportunity to pick up stuff? Get in the 2s. A lot of 2s. Wow. What about
I don't think
you,
I've ever
Patrick?
bought anything on a Prime Day.
I have. Wow. A lot of people really don't care. And that's cool. I just wanted to see where y'all's heads were. I look for Prime Day because I order a lot of DJ stuff off of Amazon, a lot of cables, a lot of that stuff. So as much as I talk about my wife ordering off of Amazon, I do as well. But Prime Day promises to boost sales ahead of the holidays. So we'll see. What is Prime Day? What day? I don't know what day it is, Tyree. I don't know what day it is. How about this? Ron says they've built like 7 Amazon warehouses in my area in just the past year. There's, Amazon is just a behemoth. All right.
So the same reason I'm bearish on Apple and their iPhone release, it's going to be the same reason I'm calling BS on this, that they're not going to see the boosted sales like they're trying to promise people.
All right. I can.
People don't have the expendable income to go buy random sales just because it's a sale anymore.
So there it is. I thought it was a lot of more Androids out there. 71% Android compared to 27.8% Apple. I felt that for the longest time there was a lot more Android phones out there as compared.
What does it mean though, 2012 to 2022?
That's just over that time period.
Is that the change that they've gone up, or is that the numbers?
I think that if we both looked into it, that there's still more Android phones. Go ahead, check it out. I think that there are more Android phones out there compared to Apple phones. Just in general, there's a lot of people who's like, I'm not buying Apple, and I think it's cheaper. But the bad thing about being on the Droid side of it, though, is the apps are not nearly as reliable. And I think that that's why people want to go to the Apple side, because they have a lot more control over the apps. A lot of people like that. A lot of people don't like that. Blah, 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 blah. But they do have a lot more control. Android OS also powers most of smart TVs and a lot of devices, says Roger.
And that's why there's a Fire Stick, because nobody wants to use the TV interface.
Listen, and as much as I love Apple, I've never gotten into Apple TV. I still think that there's a lot more Droid devices out there than it is Apple devices. And I think it's been like that for a minute, not just recently. All right. Patrick about to fact check that. Yeah. Did you check it? Did you see anything?
I mean, everything is talking about the rate of change more so than, just total volume. So that's why I'm trying to find one that's just volume more so than rate of change.
Well, actually, you can't. I'm reading that Android market share dropped from 70-71.
Yeah, I saw that part.
Wow. See, that I did not know that. So that just adds more fuel that more people are jumping on to Apple. Is that what that means? I'm just curious. Does that mean that more people are jumping over to Apple? And if that's the case,
I found an article from September 3rd. For the first time ever, there are more iPhones in the US than any other type of smartphone.
For the first time ever.
Counterpoint. iPhone took over the entire Android ecosystem in June to claim 50% of US market share.
So then let's go. Interesting. Then let's go to the next story. All right, this is your story. Talk to me.
Yeah. So this is basically coming back to what we've talked about in the past on here. I understand Apple is a great company. I understand they have more cash than our government currently. But at the same time, I'm worried about sales coming in for Apple for their new iPhone 14. With inflation, people just aren't going to want to go spend $1,600, $1,700 on a brand new smartphone when they're trying to figure out how they're going to be able to afford gas and food to put on the table. So
this guy right here, baby. Yeah. Okay. Keep going.
Okay. You're one person. There's 330 million people in the United States. And 50 or 60% roughly of people a month or two ago said that they are feeling some sort of hardship from inflation already. So yeah, people are already starting to feel the pinch, and I just don't see, any high-end retail product, people going out and buying up left, right, and center. And this is showing it. They were planning on increasing their production for the iPhone 14, but now they're scrapping that and reconsidering, and probably not going to be increasing production. Every time on yours, man, the article gets blocked. It doesn't get blocked on mine until you open it on your computer. I don't know what you're doing on your computer though.
I don't know. I'm doing my computer stuff. I don't know.
But basically,
Joey messed it up.
They're cutting back. They're not going to increase production like they first said they were, because they have noticed a slowdown in pre-order sales than what they were expecting. So yeah, just another point. people are feeling the crunch with inflation, and people are not willing to spend extra or more than they have to right now. People don't have that, what's the word for it?
Disposable income?
Disposable income that they're going to go hide, or they're going to go spend on iPhones or new tech products. Simple as that. I love the new the iWatch 8 Ultra or whatever it's called. I would love to get one, but I understand I'm not going to do it because I already have an iPhone or an iWatch 6, 7 or whatever the one before this is, and it works fine. I don't, even though I like it, doesn't mean I'm going to go out and buy it. And I think a lot of Americans are in that situation right now. A lot of people all across the globe are in that situation right now.
I'm still going to stick with the idea that Apple is nerdy, geeky, cliche, niche people.
Yeah, and they lost all their money trading monkey JPEGs.
I didn't trade monkey JPEGs, not me. And I like what James says. Apple's strict protocols increases the reliability of their products and apps, and their passionate longer support for their products simply smokes anything Android.
And I totally agree with that. From somebody who's been working on our mobile platform for the last 5-6 years now, I completely understand. I've recorded tons of videos for both our Android and iPhone markets. And Android just doesn't compare because there's so many different screens. There's so many different build types that Android has to try to be compatible for. Nothing is optimized on an Android market or an Android phone. iPhone, you have maybe a couple of different screen types, but all the hardware is all the same. So it's easier to optimize, and it runs. That's why iPhones run smoother, is because everything is well more optimized than anything Android could produce, because there's so many different types of Android phones out there. Simple as that.
That's okay. Let's go to my next story. I got this one. This is Microsoft. Is this the most sought after stock today? Microsoft has been around for a long time. For readers interested in the stock, it's currently valued at $237. The transactions are called off, blah, blah, the stock hits $241. Microsoft Corporation had a pretty dodgy run when it comes to the market performance. The one-year high, the price of the stock is recorded $338, with the lowest at $235 in the same period. I still think that Microsoft is still a top-notch company. It's been around for a long time. I just look at, the whole idea of PC sales going back to Apple products compared to anything else. But I'm a little different when it comes down to Apple products than when it comes down to like Windows products. Apple stuff is reliable, just as what was just said. Apple products are reliable. People will pay them more money for the most part
I would
for
stay
those
away
products.
from Microsoft.
I'm not. Listen, but Microsoft is a company that's been. We're gonna look at it.
It'll be
I'm just
around
looking
for a
at the
while,
story.
but I wouldn't be buying it right now.
I didn't say I was going to buy it. Just looking at the story.
Insiders have been selling left, right, and center.
I still think that it is a company that's a well-known company that's been around, that ain't going away, that could it actually still be a value play? We'll take a look at it. All right. Could it still be a value play? We'll take a look at it. All right. So I'm going to bring that up as one of my stocks. Another one of your stories. UK pensions hit with whatever that is. What is that?
100 million pounds. So basically now that the pound has
Okay.
lost so much, it's basically the same as 100,000 or $100 million. So yeah, basically with the drop in the pound over the last few days, the bond market just tanking for the UK, all these pension funds that are pulled together, they get under one big umbrella for everybody to be, so they can have all this money funded or, put together so they can buy bigger positions. They do a lot of hedging. Obviously, as a hedge fund, similar thing to a U.S. hedge fund. People put all their money, pile it all into one, so they have more money to allocate, and therefore you can get bigger returns when you have a bigger position. Well, they also hedge their positions, and using bonds or gilts, if I'm not mistaken, is the UK equivalent. And this is why, as Reimer just pointed out, the UK central bank has intervened, is because $100 million margin call has been hit on these companies because their hedge, which was to buy bonds, basically because nobody wants to take on risk right now. So bonds are definitely safer than stocks. So they buy the bonds as a hedge to keep, collateral on their books. Well, when the bond market just tanked like we just saw, that has now started giving margin calls to some of the biggest UK pension funds. The same kind of practice happens here. US pension funds are some of the biggest investors. That's why a bull market is great for everyone, even if you don't have money, yourself that you're managing in the markets. Most likely, if you're a government employee of some sort or a teacher, something like that, you have a pension fund being managed by these major hedge funds. And the same kind of situation could happen here in the States. If you the US dollar is strengthened a lot. Well, when the dollar play gets old and everybody starts to dump it and the dollar comes tumbling back down, this same kind of issue could potentially happen here in the States with the pension funds that we have. This is why, because there's so much money being put up for collateral based off of these pension funds being margin called, because their safe investments have dropped so much in the last 5 days even. That's why the UK government is coming out with the bailout and going to start quantitative tightening or quantitative easing again. So while it kicks the can down the road, it still doesn't fix the issues. And, this may be the catalyst to get us a nice little bounce up until the end of midterms. But I mean, after that, man, there's really not a whole lot to be positive about unless something drastic changes.
I still think that after midterms, the market tanks tremendously.
And I agree. And that's why I think this may be that catalyst to get us a temporary bounce to keep us floating for a little bit longer. But I mean, you can't quantitative ease forever. And they've even said they're going to quit on October 14th, I think. Let's see in here. I don't know if it was, increase in bond prices about 1% between September 22nd through September 26th. It's hard to read. Let me expand that up a little bit. There we go. But coming down, one of the big things I wanted to take away from this, they're unwanting to buy the funds some extra time to find the cash to settle the trades, at which point they could put new hedges back on at par. But this would also create more selling pressure in the gilt and sterling swap market. So once again, very similar to 2008, hearing a lot about swaps over the last couple of weeks, or derivatives markets, if you will. There's already signs that the markets are unwinding, but this is a loop process that could potentially put us in where, they have to sell some of their holdings to meet their margin calls. They try to open up new hedges. Then all of a sudden those new hedges go down or drive the market down. And then they have to, get margin called again. And it's an endless vicious cycle that there's really not a good or clean way out of. So this could really mess up markets even more so. Granted, right now they put a Band-Aid on a leaking dam, but at some point, unless they come up with a more a better way of handling this, we're gonna be seeing this coming back in the not too distant future.
All right. Interesting story. And, when they have to sell off good stocks, it makes those stocks go down for no good reason, except for they have to get out of them in order to cover their margin call. That'll happen, and that's not a good thing either. All right. We got to get moving. Man, we're moving already. All right. I'm going to go through my next couple of stories when I get to them a little quicker. Tesla China looking to hit over 80,000 deliveries this month. Everybody knows how big a behemoth Tesla is in this whole EV space. Tesla is just going to keep delivering the cars. That's it in a nutshell. So I'm going to look at Tesla. All right, next story. That's your story.
Oh, yeah. So we've already talked about it. Who was it a few months ago that we talked about? What was the home buyer, the app that people you were using that were buying homes in big areas?
Zillow?
Yeah, Zillow. So we all
Okay.
saw how Zillow was starting to take L's on all those homes they were overpaying for.
Yeah.
Well,
See you,
Open Door,
Nectarios.
the next one in that list. It talks about, goes into how these big companies were buying the housing market left, right, and center, heating it up. And, because they were going to turn them into rental properties, single family rentals. And 2021, was impressive. Nobody's been talking about it this year. We're seeing even more buying than what we saw in 2021, and we saw the effects that had on the housing market. So it looks like they're, one, trying to prop themselves up. They're getting into that vicious cycle where they have to keep buying and buying and buying, or else the Ponzi scheme runs out, kind of like we're seeing in China right now with their housing. But then in 2021, they spent a whopping $2.5 billion in single family rental homes, up from, where was it? I thought it said, maybe it's further down in the article, but yeah, they continue to increase their buying of single family homes, driving the housing market up. It's what we've seen. Everybody across the country has pretty much seen it. But now the company has reportedly took a loss on 42% of its homes or home sales last month.
That's a big number.
Yeah, with interest rates heating up, with the markets slowing down, these companies that were buying these homes thinking they could just flip them or turn them into flip them to new home buyers are left holding a massive bag. Kind of reminds you of, but at the same time, Powell's already said the housing market's going to crash anyways. He's letting it burn. He's already cut it loose and let it dying. He's not coming back in to save the housing market, so he says, at least, in his speeches that he's given. So here's a lot more pain coming into the housing markets in the very near future.
All right.
But yeah, it's hitting houses, hitting profits. So from buyer standpoint, wait until you start to see, the pain really kicking in, and then use that as an opportunity if you still have, the ability to break even or make a little bit on your home. If you're trying to look for a new home, wait and find a really good discount on a home that you probably wouldn't have been able to afford in the last couple of years. So best advice possible.
I'm on the other side of that. Without the homes, you're not buying real estate. So I've got a position in DRV and it's doing well.
Yep.
Edward talks about Patrick bought XHB contra funds. What is the story now at XHB in the housing market? What is your recommendation? I think he pretty much talked about what he thought was going on with the housing market right now.
I'm not familiar with XHB, but I like DRV. DRV is the one I've been big on.
Yeah, and I personally have a stake in it, and I'm happy.
You're welcome.
All right, it had nothing to do with you.
All your good trades come from me. It's okay.
No, they don't. All right. Harley Davidson spins off electric motorcycle division, $1.8 billion. Energy, you hear? How about this? So we talk about the cars. Harley, the biggest motorcycle company out there, spins off their electric motorcycle division, $1.8 billion SPAC merger. That's going to be something to keep your eyes on, especially if you're hot and heavy on the EV space, just like I am. So I took that story. Another story, I tweeted this yesterday. Biogen soars 40% on Alzheimer's Drug. Mizuho raises the stock to a buy. The stock is up nicely today. Is the pullback on DRV a good entry level? I still think that, based upon the story that Patrick just mentioned, that yes, it's still right. If it pulls back, it's still, I think that the housing market,
I'll take
the
a
real
look at
estate
that.
market.
I'll take a look at it in a little bit for Stefan.
Okay, there you go.
Yeah.
Harley won't sound. Yeah, the Harley won't. Can you imagine, instead of going, it's going to go.
Dude, did you see the charger, the electric charger that came out?
No, I have not.
Yeah, and so what they did is I'm pretty sure it's a charger. It's an all electric charger, some type of muscle car they're bringing out. And instead, since it doesn't have any sound, they put in a speaker to make the sound of an engine.
Wow.
Yeah, they have a fake automated sound to make the sound of the engine.
I think that's hilarious. All right. Before we go look at the stocks, just want you to guys remember one more time, this Friday, Stock Market Masterclass. It's free. You can invite your friends. We want you to invite your friends. it's gonna, and I think that really for a lot of people it's going to be life changing in regards to taking your investing to the next level. So I'm putting that out there. I want you guys to, I need you guys, I need VV Nation to support this. You guys need to be out there. All right.
And I need all VV Nation right now to smash that thumbs up like button at the bottom of your screen.
Yeah,
right
you
now.
know, we only got 47 likes. What the flying flip is going on there? Holy smokes. Do you guys not listen? We take the time, at least we try to bring good, useful market information to you guys every single Wednesday. All right, so listen, all you got to do is hit the like button. You ain't got to pay us no money. You ain't got to just hit the like button. There we go, 65. That's all. All right, let's get into the software. There's the, again, big, I want to put this back onto intraday, 5-minute bars, current day. The market's still moving up from the open. Overall, a little bit of a pullback, a little bit of consolidation going. We got about an hour and 15 minutes to the market close. Again, a nice, good open day for those people who are a little bit more aggressive. Let's go to the viewers tab.
I think by asking for the thumbs up, I think the bots started leaving.
Oh, is that what?
Yeah, we got rid of a few bots by bringing it up.
Oh my gosh. There's the day. There's all of the major indices with our composite leading the way. That doesn't always happen. But the VectorVest composite is up 2% today. Remember, that tracks the movement of over 9,000 stocks. 2% today. All of the major indices are up. Again, today looks like it could be a blast-off day, knowing that our indicators were already looking for a market bottom. Let's go see what happens tomorrow. I'm not even going to do the industries. Where are we at? We're at 246. So, no. I'm going to move a little quicker today. Let's go to the customer picks. Patrick.
Let's get those knocked out because I see a lot of people asking the same question. So,
all right. Patrick, start on the first one. Here's the stocks that you gave us to take a look at, and Patrick's, we're going to switch back and forth between. So go, Patrick.
This is the list. So I've got this one, DRV, CLFD, BNKD, Gush, and EVC. So right now, out of all of them, DRV in a nice uptrend, even with it pulling back here today. You know, honestly, folks, we've been talking about this pushing DRV since it was $20 to $30. Now it's had 100% run since we were first starting to talk about it.
Yeah, man.
If you guys, this is why it pays to hang out. This is why it pays to be here, because we bring you guys these trades consistently. But DRV has been one we've been pushing for a while. So if you guys are just now getting on the DRV train, know that you're going to be jumping in later than when we first started talking about it. So you've missed out already on a lot of it, but we'll take a look at the chart here in a second to talk about an entry. But right now it is in a steady uptrend. CLFD is also in an uptrend. Stock has good long-term potential, little less risk associated with it. Timing, I need to see the timing pick up a little bit more though, and we'll look at the chart and get a better idea for it. BNKD up 1.42. With an RT of 1.42 tells us in a really nice strong uptrend currently. BNKD, I believe, is a contra ETF on the banking sector. And with the banks just getting hit with a $1.1 billion fine between 16 big banks, that's definitely going to put a strain on them. They've already been underperforming in a market that they should be thriving in. They haven't. So I like the bearish trade on banks. But we'll talk about the overall entry points here in a second, though. Gush, right now, I still wouldn't touch it with the 10-foot pole. Gush or drip, you know, obviously oil markets are going down. Gush would be
a bullish.
Yeah, Gush is bullish. So oil markets have been going down over the last few months. So obviously, Gush, really not the right time. RT of 0.74 tells us it's still in a downtrend, even with an 11% update here today. But I wouldn't take the downside because, one, it's already been going down for a while. And two, like I said at the very beginning of today's stream, you could wake up in the morning, find out that Russia's dropped a bomb on Ukraine, and then all of a sudden oil's blasting off to the moon. And then your short trade is going to be absolutely demolished. So I think we're a little late on the downside, and I don't like taking the upside because there's too much unknown with oil right now. And then EVC, EVC is a sell. I'm going to firmly believe that the recommendation is really the main thing to focus on here. Yeah, the company has good long-term potential, but it's a lot riskier. And right now people are risk off and it's in a steady decline. So overall, the stock is not favorable. Now, if we take a look at the charts on these, graph those. Oh, I gotta reset everything now that Glenn's back. It was nice not having to reset everything. Everything was just on the same layout that it should be on, you know.
How about you get over yourself? Okay, that's the way I'm looking at it.
Fair enough. Fair enough.
There it is, right there, right below.
My wife told me that this morning, and now you're telling me it this afternoon. You know, when everybody keeps saying the same thing to you, maybe it's you.
I think that Roger, your question is, Nordstrom is completely shut down. How will that affect oil and gas? It's going to be more expensive.
Well, so here's the thing about the Nordstrom, though. Interestingly enough, I believe it is Norway is supposed to be opening their Norway pipe or whatever, basically a natural gas pipeline to Europe. It was already in the works to be built so that way they could lessen their dependence on Russian oil or Russian gas. Interestingly enough, the timing is a little suspicious where you have the gas pipeline being blown up one day, then a couple of days later, you have another country in Europe opening up their own pipeline. I'm not going to point any fingers, but it definitely, you know, the Nord Stream pipeline that blew up, Nord Stream 2, it doesn't really impact the prices right now because it wasn't being used right now at the time. Yes, it was built, but they haven't turned on the taps yet on that one. So I don't think it's going to have too much of an impact, at least right now. But you also have US starting to become a major exporter. You have Norway, which just opened up their first lines. So I don't think Nord Stream pipeline, NS2 is being blown up is really going to change that drastically the outlook on oil and natural gas right now. Simple as that. All right, but getting into it, DRV. So yeah, DRV, we talked about it here when it was retesting that level of resistance, exploded through there, has gone up significantly since that point, but we are at a toppy level. Now, we know that stocks can stay in overbought territory for quite some time, so just because the stock is in an overbought territory does not make it a bad thing, but means that you're paying a little bit more than you probably should right now. What I'd be looking at for a potential new entry or potential retest for, coming down to the horizontal line, right here around 61 or so. You can see it's coming pretty close to retesting that as of today, bouncing off a little bit. But if it gets a real pullback, maybe down here to this support floor, it's not going to tell me what price that is. But I believe it was at like 57 or 53. Is that what it says, Glenn?
Yep.
So yeah,
53.44.
I would be very surprised to see it come all the way back down to this level of support, but anywhere in this range, you know, keep an eye on your overbought, oversold indicators. Wait for it to come back out of that oversold territory.
This is going to be a good level of support right here.
Yeah. I'd wait, you know, it's whenever looking at an overbought, oversold indicator, it's not just waiting for it to hit that oversold condition, but once it hits that oversold condition, that's when you need to pay close attention to the charts. Look for either a bullish candlestick pattern for a reversal sign or that oversold condition or that oversold indicator coming out of that oversold condition and then confirming it maybe with another indicator of your preference. That would be my best guidance because nobody's going to be able to say, oh, when it hits 55.69, that's going to be the bottom and everybody needs to buy in because nobody knows. It can be a little bit more, it could be a little bit less, could be a lot more, a lot less. But based off what we were talking about, with the news rallying the markets here today, with QE starting back up or with the Bank of England, that could be a temporary catalyst that drives the markets higher for a short-term basis. Is it going to be substantial? Probably not, but at least a temporary bounce because we are so oversold.
Patrick, we got to move through these, bro.
All right.
We really do.
I've had a lot of people ask that, so I wanted to make sure we spend a little bit more time. But yeah, that's what I'd be looking for. Wait for a pullback, use that as a new entry. Next one, CLFD, 3 and 8 are still negative. You're seeing signs that it may be starting to turn around, but everything is still in a downward situation, so still not a time to buy yet. BNKD pulling back once again, the same kind of situation. I would use the same guidance with DRV as I would with BNKD. Temporarily, we may see a little bit of a pullback in these on a short-term basis because the markets are so oversold. But I'd be waiting to look for that peak and then jumping on board with some of these going forward. Gush still wouldn't test it. And then EVC has been in a steady decline for some time. Nothing is showing the positive signs of a reversal except for one green day after a long steady decline. Therefore, I would stay away from this. That's going to do it for me.
Interesting that when people are asking us to look at stocks, remember, folks, we're not looking at the news on it. We're just giving the analysis. And the cool thing about Patrick and I both doing that, we're not biased by whatever news that's out there. So you're asking us to take a look at the stocks. We're giving a VectorVest look at the stocks. So there's no bias there. Just want to keep that in mind. All right. I'm going to take the other ones. All right. CCRN, Tesla, Tallow, AGNC, and NNDM. And the big things, a young lady who's here who was asking about NNDM. Talking about they're having a lot of money on, more money, that it was all really positive. I'm gonna talk about that, but someone wanted us to really look at NNDM, nano dimensions. First thing I want to say as soon as I look at it is that it's a sell recommendation, but there are a couple of positive signs that I do like about nano dimension. CCRN, Cross County Health. The stock is currently undervalued. Like it, buy recommendation, fundamentally sound, and in an uptrend. Tesla, definitely we're going to know that it's overvalued, 285 compared to 101. Buy recommendation, fundamentally sound, in an uptrend. Talos Energy, 1653, 2507, undervalued, but a sell recommendation, good upside potential. So this is more of a value play. More of a growth play. I'd be careful with those right now. When the market's going down, you should be looking for more of a value play. Actually, it's more of a value play because it is undervalued. I'm going to call that more, and it's relative value. I'm going to call this more of a longer-term play. AGNC, American Capital, trading at 917, value of 1085, undervalued, good upside potential. Another value play, and Nano Dimensions, 247, 374, relative value above one, another value play. So even though these stocks are sell recommendations, I think long-term they do have upside potentials with relative values being nicely above the value of one. All right, so that's just a cursory look at our indicators. Let's go take a look at the stock graphs. Let's go take a look at them real quick, put them on a 3-month graph. And because I'm looking at these from that perspective, let's go put on the swing side, looking at a 20-day exponential moving average, looking at CCRN over the last 3 months. Sort of bottom left, moving up, but a solid level of resistance at 30.49 that over the last 3 months it hasn't been able to get above. It is currently above the 20-day exponential moving average. Would definitely like to see if the stock can break above that. So nice level of resistance. Let's see if we can get above that. And with a relative value at 1.64, good upside potential. Love the earnings on it as well. Would I buy it now? I'd wait for it to get above that 3-month high. Next one, Tesla. Tesla's a tough stock. Tesla is a good, strong stock, as you can see by way of the earnings. A lot of volume kicking in on the stock right now, even though it's in a bit of consolidation. In a channel, within a channel, within a channel. But within the center channel, you got 1, 2, 3 channels. Right now, it's in the middle lane channel. Not above the value of the 20-day exponential moving average, but long-term relative value above 1. Earnings is still rising. Long-term, I still love Tesla, but right now, overall, and a little bit of a consolidation right now. And the news about how many cars they're making could be a boost to the stock's price. So,
Glenn, would you say Tesla is doing a good job at using lane assist right now?
Wow.
Staying in that channel? Staying in its lane?
There's the crickets for you. All right.
Thank you. I deserve that one. Thank you.
Yeah, there's the crickets. All right, let's go move down. Tallow Energy, petroleum. Look at the earnings. The earnings on majority of the energy or petroleum stocks is just rising. These companies are still making money. They're still making money, but the value of oil is dropping, affecting all of these petroleum companies. Could this be an indication that it's starting to get ready? I still think hurricane season. I think that the reserves are being as low as they have been. Oil may still be a good play, but let the stock come to you. I do like the move. It's still below the 20-day. It's got some headwinds before it can get out of there, but I love the companies making money. AGNC, REIT. I'm not feeling this. I like the earnings. I'm not feeling the stock. A precipice fall after this level of support. A little bit of indecision day, a lot of selling pressure, a lot of volume, which means there's some news that affected the stock today, but not enough to really move it. A little bit of indecision day, a doji day. I do like the earnings, but I'm not liking price structure. Price structure don't look so good.
We talked about REITs last week. REITs are not a good place to be in right now.
I listen, I'm just looking at the stock, but I do like the earnings. The company makes money, but this ain't I'm with Patrick. I'm not feeling getting into it right now. And if you are into it, you got to make a decision of when enough is enough. You got to be like Popeye. Last stock, NNDM. A lot of consolidation going on right here. They may have a lot more money than what the stock is worth or whatever the story said. Watch earnings over the last 3 months, pretty even after a big pullback. Currently below the 20 exponential moving average, a little bit of a sideways move. And let's go see. Let's use the body. I got a level of support sitting at 235. From a value play, though, relative value above 1, the stock is undervalued as well. Long term, yes. Short term right now, let it get above that 20-day exponential moving average. Have a good day, Energy. All right. So those are the stocks that you wanted us to look at. And again, unbiased, not by any news that's out there. We just gave hardcore look at what was going on with the stocks. All right. We're sitting at over 3 o'clock. Sigh. All right. I'm just going to look at my new picks today. New picks today. Tesla was a story. I got oil in here. I think that wasn't one of the stories. I still think that oil being the way that it is right now may be the time to jump on board. I know it's been tough, but looking at the reserves, looking at possible shutdowns of refineries coming with more hurricanes and all that stuff, oil may be a good play. BIIB with that Alzheimer's drug up 39%. Again, I tweeted this out on my Twitter account. If you want to go look at Glenn Tompkins Jr. on Twitter. I put this out as soon as the story broke yesterday. Nice follow through, up 39% today. Microsoft, that story about Microsoft, it's up today. I'm with Patrick, though. I'd be a little careful with it. It is clearly overvalued, 240 with a value of 164. It does, fundamentally, it is sound, but it is in a downtrend. Harley Davidson, undervalued, hold recommendation, good upside potential, not nearly as safe, and not really going up in price. That story could boost prices, but again, it may not. Amazon, clearly way overvalued, fundamentally not sound with a relative value for the long term, but it is a company that makes money and consistently makes money. Well, with all that they do, all they can do is just keep on making money. Let's go graph all of these stocks real quick. All right, put them on a 3-month graph. There's Tesla. We already looked at Tesla. This is one of my stories. Oil setting up. I like a nice level of support at 505 on WTI over the last 2 days, bouncing up, nice open candles. Would love to definitely see it above the 20-day. Even with that, it's still in a channel. Would really like to see it go above the value of 764. But I do like the last 2 days of move. Next one, BIIB, strictly news driven on the drug. Big jump up since then, though, or before then, it was just a little bit sideways. Not feeling the earnings. And a lot of times on these drug companies, earnings will look this way because they put a lot of money into these drugs only for the FDA to go, nope, next. And they lose all of that money. A lot of people on this don't understand why drug prices are so high as well. It's because they incorporate trying to recoup some of that money. Microsoft definitely trending down off of the high, below the 20-day exponential moving average. Even when it did rebound, it couldn't break through that downtrending 20-day exponential moving average. Earnings is rising, blah, 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 blah. I'm with Patrick. I wouldn't want to be in Microsoft right now overall.
Well, and you look at the Edgar reports, insiders are dumping shares left, right, and center right now. So it sounds like somebody's pushing an article out there to try to create bag holders.
So even if that's the case, a nice update today with no wick at the top. All right, so that's definitely people getting on. Now, is it that because Microsoft is such a well-known company that people are seeing that the stock is on sale and jumping on board with it? I don't know.
Look at the volume.
I listen, the volume is, it's not above value. It has been for the past few days, not today, but nice open day. I see you. It's not above average volume. We still got about an hour's worth of time. I don't know if it gets to above average, but I do like the open candle, very little wick, if any, at the top of the candle. I don't know. Are people looking at it that it could be on sale? I'm just putting that out there. Hog, looking at Harley Davidson, steady level of support sitting at 36.60. We'll see what happens with it. Love the earnings. The company makes money, though. And relative value is above 1. Company does make money. Next one, Amazon. Are you really heading out? Well, I know. No, but nice open candle on it. A little bit of a move higher. Broke through a level of resistance of 117.49. Let's see if it can close above that. But definitely would like to see it above the 20-day exponential moving average. All right, so those are my stocks. Patrick, you got yours.
All righty. Yeah, we didn't have any picks from last week because last week was Fed. So there we go. So my picks. We didn't cover the article today. But Moderna is one that was selling. They're creating a new version 2 of their COVID vaccine and selling it. Why? I don't know. We've already seen how they've come out. Even the head of Moderna's come out, said that they're just throwing vials away because nobody's buying it. So why are they still creating a vaccine that nobody's buying is beyond me. I'm going to still take that short trade on Moderna. So this is a bearish trade. Unfortunately, we didn't get the article here today. But also the only thing I could think of with Moderna, I think Glenn and I talked about it earlier, is they're getting government subsidies to, 1, create this vaccine, and also 2, the government's buying it. So that way, they're creating a product that nobody's going to buy except for the government. So they know at least they have a consistent income from that. But there's no other reason why you're going to be making something that nobody out there is buying. So that's Moderna. I'm going to take it as a bearish trade. Apple, also going to be a bearish trade. We've seen they're slowing down on their iPhone 14 production. They're having some fight back on the 30% increase in inflation, or on their NFT sales through their in-app purchases. And then GameStop comes from that 30% increase. GameStop has a new developed NFT marketplace. And that is really going to hinder GameStop as well as Coinbase or any of these other marketplaces. That's really going to be a drawback or a setback for them with their mobile app version of their NFT marketplace. So it's going to be interesting to see how that takes place, or that starts to get filled out over the next few weeks.
So for all my Android people out there, I'm playing this, and then for all of my Apple people, I'm going to play this.
This is like watching a movie being produced and you can't hear anything and you have a green screen behind you, but you have no idea what's going on. Just You know.
You just keep on going. All right. They heard it. They heard it.
All right, fair enough.
Gosh.
But yeah, so those are my three. I thought I had one more, but you know what? That'll be fine. GameStop, always going to be bullish on until we see some other changes. Still bullish on GameStop, especially at these levels. We've had the sell-off. If you follow the cycles, we're close to a new up cycle starting. So I could see GameStop making a pretty big run soon. Also looking for a news announcement to kind of fuel that a little bit. Apple bearish on, Moderna I'm bearish on. The other one was...
What was it? I put in all the ones you wanted me to put in.
I thought there was one more, but maybe not. I was debating on putting DRV in today, because I still think that's a good play. But I held off from putting that in there because it's overvalued, it's overbought right now.
I put
temporarily
it
on a short-term basis, since we take it week by week. I think we could see a sell-off in it, for the next 5 trading days. I still like it as a good opportunity to keep an eye on, but I take it out of my watch list. You're putting something I think is going to go down over the next week. But,
Fine.
for these picks, these are picks for week to week. And I don't think right now is a good time to be entering DRV. I think there's going to be better opportunities if you haven't been jumping on board and taking advantage of it, for new people getting into it. If you're already into it, you have some cushion most likely baked in. You could sit through some sort of a pullback without having it wreck your portfolio and still be up nicely. So that's my take on DRV.
All right. One last thing before we go. I'm going to put up this stock market masterclass. Again, it's free. I need you guys to support it. Just go register. Click on the register button. It's free. It's free. Hey, Patrick, how much you got to pay?
Free 99.
Yeah, free 99. It's free 99, folks. Come support us. And I'm telling you, you'll learn something. You're going to learn something. It's going to be awesome. It is our next big event. So how many likes? We got our 100 likes. Awesome. We got our 100 likes today. Joey left. So I don't know how to make this do what it do. Sigh.
You want me to come over there and work your computer for you?
No, I don't want you to come. I'm going to punch you. All right. So now Joey's back. We get ready to sign off. Joey, you leave at the wrong time.
This was supposed to be over 45 minutes.
Yeah, I know. Let's go.
Joey, Glenn can't do anything without his caretaker. Come on now.
Wow. He said I can't do anything without my caretaker. Listen, I'm signing this off. Does the masterclass include a free trial? Roger, I think that in the masterclass, we're going to give you an opportunity to get VectorVest for 60 days. I think free. Is that right? Good. For 60 days for free. 60 days for free. All right, so come take a look at what we have to offer. If you're brand new, we're going to give you an opportunity to take advantage of a trial for 60 days for free, Roger, for all you guys. All right, so thank you for being here. Thank you for supporting us. We appreciate it. We try to bring a lot to the table. Masterclass can be rewatched this weekend. Yes, it can, Lynette. It can. Uncle Glenn, see you at you see a computer plug, pull it off the wall. Wow. You know what you get? You get the crickets. There you go. The crickets are for you right now. So you'll get mad being called Uncle Glenny? No, I'm getting used to it now. I sort of like it. All right, with that, folks, thank you for being here. Adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Bom dia, salam, shalom, namaste, and all my people in Tampa. Keep your heads clear of all that stuff that's going on. Stay in your house. Stay safe. We love you, and we'll be praying for you. So until the next time, folks, see ya.
Toodles.